So to start to get started, I'm Nicole Strasser. I've been with Prudential for 22 years. So I have a lot of experience in everything from retirement to annuities, to pensioners transfer, to group insurance and life insurance. I've had the pleasure to meet with the ladies you're going to talk to today to talk about getting your financial security and your financial health in order. So we're really excited to kick off today. I'm going to start with just a brief introduction, and then I will turn it over to the ladies to introduce themselves and tell a little bit about what motivates them when they think about financial security. So first, we have Susan Kelly, Vice President at Knowles Associates Insurance Consultants, and President at their affiliate office, Welsh Associates Insurance in Tunkhannock. We have Jill Valenti, Vice President and Northeast Regional Sales Manager for Fidelity Bank. She's been with Fidelity Bank for 14 years. And we have June Weber, the Retail Bank Director for ESSA Bank and Trust, and she has an extensive 40-year career in banking. So with that, Susan, I'm going to turn it over to you to start.
Okay, just a little bit more history. I've been with Knowles Insurance for 34 years. It's almost hard to say. I started at a very young age, came out of college with an associate's degree, and joined them on their finance side when we had 6 people in the office. Fast forward several years, I've had every position in that office except in personal lines, and looking at our personal lines manager who's here. So it was easy to stay and grow with the organization. But one of the things that we want to stress today is the vulnerabilities that we do have in life at points in our career. And one that hit me very fast was I was probably 32, there about 10 years, 2 small babies, and realized I didn't have enough education for what was going on in our industry. I either needed to make a decision to go back to college or commit to insurance. So I made sure that there was a position available for me to move out of finance if I went into insurance, and I went and got my chartered property and casualty underwriting, which is essentially a master's degree in insurance, and that then projected me into the sales side, which I was able to grab hold of in about 5 years later. So it's been a great career. Insurance is starving for talent, especially there's very few women in sales roles, such as my own. Some of my coworkers are here today, and hopefully grooming a couple of those to do exactly that. I have some specific insurance items I want to put on the table, but we'll do our introductions first.
So my name is Jill Valentini, and I am with Fidelity Bank. I don't know what I want to be when I grow up still, but here I am. So I came back into banking about 15 years ago. I actually was a teller for a competitor throughout my college tenure at Penn State. Got married and divorced a couple of times. 15 years ago was my most recent divorce, though. I was at the phase in my life where I had left my position as an accountant to support my husband's business. So as the marriage dissipated, I was left with no job, a mortgage, an investment property, debt from my husband's business, and I had a lot of debt from infertility because I was going through IVF and those types of treatments for that. So I panicked and I thought, well, what am I going to do? So I was fortunate enough to find a home at Fidelity Bank, and I kind of held numerous roles throughout that, and they've really supported me in my growth there. But I just wanted to share that piece of my story with you all because here I am today, Vice President, Regional Manager of a bank with a solid credit score of 800. I have my finances in order. My 3-year-old Volvo paid off. My mortgage almost paid off, will be paid off in 7 years. Enough liquidity to support myself, and the hopefulness that I'm instilling some of that training into my nieces so that they will never find themselves in the position that I was in at one point.
Good afternoon, everyone. June Weber from ESSA Bank. And when we met about a week ago on Teams. We each talked a little bit about ourselves, which you just heard, and you'll hear my story. And I started off saying, I started in 1981, so it's been a 42-year career for me, all in banking. And started really in 1981. Jimmy Carter was president. Interest rates were kind of feeling like they are now, okay? Rising interest rates. Prime was 18%. There were no jobs. I had a student loan payment of $64.67 due in September for my first payment. And it was, graduated in June, and thought I need a job, and started as a part-time teller at a bank, at a local bank in Allentown. And management training position came up. I went for it and was fortunate enough to get into the management training program and started my career in retail. Spent a lot of time in the retail bank, moved through small business lending, eventually worked into private banking, commercial lending, and then rose through to be regional president at a bank I helped start, namely Team Capital Bank in 2006, which we then sold to Provident Bank, a Northern Jersey bank. And at that point, Pete Gray, who was our chief operating officer, said, hey, why don't you come over to ESSA Bank? It's a great community bank, and we'd love to have you. So I joined as regional president back in 2017, I believe, and great group of people. It was really covering the retail bank as well as the commercial bank. And my husband got sick, so I had to make the difficult decision to retire my position, take a break in my long banking career to take care of him through his passing a year and a half ago. Came back to ESSA Bank, which shows sort of what community bank is about, how they care about their employees and people, and they brought me back, and I'm back into retail banking. So it's been a full season, a full circle for me. We want to talk a little bit about vulnerability and how to keep going, and that was what was important to me. I kept going through, what I called and labeled a storm in my life. It was my honor to do that for my husband. Came out the other end whole. But want to also talk about the plan leading up to it in all the years that I worked to make sure that I always paid myself first and really thought about knowing one day I literally did blink, and 42 years later, here I am. So planning is really an important component that I'm sure we'll talk about today.
Thank you, ladies. So I will open it up to the audience for questions. There is the app for questions as well. I just want to take a moment to reflect on what the ladies shared. As Susan talked about vulnerability, Jill talked about divorce, June talked about the loss of her husband. Life happens. So regardless of where you are in your path, it's never too early to start and it's never too late to start, and you may have to restart. If I think about my career at Prudential, I started when I was a senior in college. So if you asked me if I would still be there over 20 years later, I probably would have laughed at you. What got me at Prudential was the paycheck and knowing that there were great benefits, but what's kept me there is the purpose of sharing financial security. And I think of my background in growing up in a lower income household, and I'm the first in our family to go to school, to go to college and have a degree. And I think about the challenges that my parents are facing as they think about retirement. And so I'm really passionate about making sure that we're thoughtful, that we're sharing things and talking about what can set us up for success. Because coming from a lower income home, those weren't something that we talked about. I didn't know that things like credit score could keep you from a job. I didn't know about compounding interest, which we'll talk about today. So I'm going to go to the room to see if there's any questions, and if not, I'll start with the app. Any questions from the audience? So the first question is for a young professional starting out. How do you balance investing in yourself, savings, and starting your own business? So Susan, I'll start with you.
Whether you're starting your own business or working for someone, I think you have to invest in yourself every day. You have to have the ability to save. And it's all about picking the buckets that are necessary at each stage in your life. I know we had a talk in our office recently, our pension administrator was in, and love this guy. He's actually my financial planner outside of the office, but I also know he encourages the younger staff to really commit a lot of money to the pension plan at a time where they need to be considering other investments, family, home, whether or not they're going to save for college education for their children, and just simply being able to live, have a vacation. So I think it's reevaluating annually where your commitments lie, what bucket you're going to put your finances into.
June, if you'd like to end.
So, great question. I liken a budget kind of much to like starting a diet or a lifestyle change. Even most recently, I consider myself in a very financially secure place at the moment, but that could change tomorrow, that could change next month. So even recently, what I encourage everybody to do is you have to sit down and face the hard truth. I know I just gave this advice to a close friend of mine as well, and to my sister and to my family because I'm the banker in the group, but you have to actually sit down and weigh what your income is, what your expenses are, and what you're willing to sacrifice for another goal. So something as simple as, do I need a Starbucks coffee every day, or can that $5 to $8 go towards my child's education fund? Or do I really need to have cable TV? Or can I utilize that $200, maybe have Netflix for $15 a month, and bank that $200 for a future goal of starting your own business? And I do want to address a little bit the startup business. So there's a lot of resources available to people and young entrepreneurs as well as more seasoned. So I think building your network around that, utilizing the resources that you have, partnering with your bank at whatever level, that may be a community bank, a regional bank, etc. But also finding those resources like a small business development. There's a lot of grants available, they're local and statewide that can help. So again, it's that you have to do the exercise to get the results that you want, and the research is a part of that.
Yeah, just well said, and from both of you, just knowledge is power. We talk about it every day, getting that knowledge. If you're going to be starting that business, start whatever it is, it's making sure, that you're passionate about it, because if you are, that's an important ingredient. But you've got to be realistic about it. You have to put the time into it and gain as much knowledge and networking. One of the things, just over the years in helping start quite a lot of businesses, those businesses that were successful, the business owners knew what they were good at, and they knew what they were not good at. And what they were not good at, when they could, they brought on folks like, I'm really great at selling. I'm passionate about the product I'm producing. I'm good at hiring employees. I'm good at training employees, but I don't know anything about bookkeeping and dealing with banks. So I need to get someone that can help me with that. I did a lot of loans over the years when I was in private banking to a lot of doctors, and they were doctors from all over the world, studied all over the world, had degrees up and down, very big positions. And I always would say, if you can't send a bill out and collect it, it doesn't mean how good a doctor you are. That really made the business for them, hiring the right people. So again, get the right people around you, the right accountant, the right attorney, the right advisor, making sure from an insurance standpoint, whatever you're moving forward with, the plan is so critical. Don't be rushed to start it. You've got to put the time into it, gaining the knowledge, and being a sponge, honestly. And also understand, where you are from an economic standpoint. Is this a niche product, or is it something that can carry you through the ups and downs of the economic cycle? Know your product, know where it's best sold, if you will. So the research and the knowledge is so important. It's a big leap, really. When starting a business, it's a really big leap. So it deserves a lot of energy by everybody.
And I do want to just share one more thing. So my ex-husband was the creative Start Your Own Business. And that's when I had decided to leave the accounting job that I had because I was the business mindset. And the reason that we ended up having so much debt is because he was the creative, face of the business. 2 years too late, he brought me in, and we tried to navigate and untangle that. So excellent point in making sure that you have your resources around you for the right role.
Thank you, ladies. What I would want to point out, as everyone talked about, is that only 32% of U.S. households actually have a budget. So that's a pretty frightening number and statistic. If we think about how a budget is key to being successful in investing, personal savings, and starting a business, budgeting is key to that. And all of the ladies who talk about the knowledge, and knowledge is power. So knowing what your goals are is just as important as knowing what your budget is, and then knowing the skills that you're bringing to the table, whether it be in investing, the career you're planning, or the business you're looking to open. So thank you for sharing. I'm going to go to the next app question, unless there's a question from the audience. Yes, Sue.
As three senior women in the financial services field, I've got two questions that I'm hoping each of you can answer. What was the single smartest financial decision you made that you're most proud of? What was the single best leadership decision you made?
Well, I can start, certainly. So probably the smartest decision early on, so I'll back up to my childhood. So remember Monopoly? I don't know if people play Monopoly anymore, but Monopoly was big in my household. A lot of fights broke out over Monopoly. Primarily because, remember the white $100,000 bills? I hid them under the board. So when people thought I was bankrupt, I'd be like, I'm not, right? I'm buying that, right? So to me, early on, it really came, we didn't have a shower in our house until I was 18. So really came from nothing. And probably part of hiding those $100,000 bills was I wanted to make sure that I was, nesting, keeping, building for a future. That gives you choices. Again, I blinked and I'm where I'm at right now, almost 65. And had I not laid the groundwork early on, whatever that percentage you can afford with your paycheck, start your 401k, start to put money, because the compounding effect is so significant that in 10 years you're going to look at that statement and you're going to be really proud of yourself. And you're going to say, I want to do more. Because then as you go through your life and get into your senior years, you want to have fun, right? That's my next goal, fun. And I have choices now to have that fun because I've laid that groundwork. You don't build a house from the second floor up. You build it from the basement, the foundation. And that is so critical in mentoring young folks. That's what I talked to them about. You've got to pay yourself first, and you have to live below your means. You just have to. It's very important. And the best leadership decisions are sort of ongoing, and that's making sure you're putting great people around you and listening, and that's important. Cheering people up, being each other's cheerleaders from a leadership decision standpoint. Who you're hiring, who you're mentoring, who you're bringing in.
So I would say the greatest financial thing or move that I've ever made was born out of fear. I will tell you, I was terrified at that point in my life where I was like, my husband just left me, how am I going to pay the mortgage? My father passed away young, so my mother does live with me. She is, only 20 years older than me. How am I going to support her? How am I going to support myself? Also knowing I had a job at a bank and knowing that I had business debt in my name, I had to report that to the bank that I was going through a bankruptcy. And I thought, oh my God, I'm going to lose my job, right? So there was my greatest financial move at that was born out of, and again, one of my favorite literary characters ever is Scarlett O'Hara, right? And I don't know if anybody knows the movie, but when she picks up the dirt and says, I will never be hungry again, I had this moment in the mirror when I was like, I never want to feel like this again. So that's when I was like, we're going to take baby steps. We have to get through this chapter 13. I've got to pay this off. I paid it off instead of in 3 years, in 2 years. Then I thought, now I'm going to focus on my credit. So it was taking those goals, but constantly reassessing them and continuing that assessment. It's not a one and done. Again, it's like the diet or the exercise that I liken it to. From a leadership standpoint, I would say I was promoted to a leader the day my sister was born, who is my 4-year junior, who I did not like very much. I was very jealous because it wasn't the Jill show then, it was the Jill and Lisa show. But being that my father was in the service, we were stationed overseas, so it was just our core unit, and I had to be, take your sister here, take your sister here. But also because we were in the military and we moved so much, I knew I couldn't take a back seat to how my environment was, having to make new friends every 3 years. I said this to somebody earlier, one of my most terrifying moments, if you can all come back to being like a 5 to 10-year-old, is walking into the lunchroom and not knowing who you're gonna sit with. And I was always the new kid, right? So I never want anybody who interacts with me to feel excluded. So it's my privilege and a leadership role to make sure that I make them feel inclusive and know the privilege that it is to develop other leaders.
And mine, I was thinking purely business originally, but I think from a financial situation perspective, my husband and I married very young, barely 22, and within a year and a half, we had an opportunity to buy the house that we were in, renting off our landlord who passed unexpectedly. We had nothing, and interest rates at the time, I believe our first mortgage was like 12%, it was 1987. It was the scariest thing we had ever done at that point in our life, and it had given us so much opportunity going forward, and it was just a matter of having at least one person in our life say, just do it, it will work out. And from a business perspective, leadership, I think it was the day I said, I want to go into sales. I had been with the organization for 15 years, an opportunity came about, and it was a great opportunity, but it was scary again. And I think, to your point, a lot of hard decisions are made in fear. Because I was now leaving a guaranteed salary position and going into commission only. And that was a huge jump. And it was the best thing I ever did because I found where I really can shine in terms of passion. I know nobody in this room wants to be buying automobile and homeowners insurance, but I love it. I love counseling. I love being able to sleep at night, and I never ever wake up and see that there was a fire or an automobile accident and worry that my client is insured properly. So I just know going into sales was the right thing for me, but it was scary as heck.
So what I heard was bet on yourself, and I think that resonates for me whether it be at work or in my personal life. So bet on yourself, commit to the house, commit to the big goal, and make it happen. Bet on yourself with taking a risk, whether it be a new job going into sales. And as I reflect on my career, there was a time where I had to leave a position I loved. I was in client service dealing with institutional clients, and I took a leap of faith and went to a rotational program at Prudential. And so I had to take 3 different jobs, 9 months each, and try my hand at different things. Some of it was leading people, some of it was leading projects, but in areas that I hadn't been familiar with. And I remember my first assignment being in our new business area. And about 3 weeks in, I thought, what did I do? I made the biggest mistake. I'm not liking the role. I'm not as needed as I was in my other role. I just kept on reflecting on what did I do. And I gave it some time. I did learn that new business was not the place for me. Sorry, Dave, because I see you here and I know you're in new business PRT. But I did have the opportunity to do other roles. And instead of being in client services, I got to go to operations. And if you told me then that I would love operations as much as I did, I would have thought you were crazy. And operations really was where I found the passion and the energy around making things better and then seeing the results for our customers. And so I would say take the bet on yourself, right? Take the chance, because the greatest growth is going to come just outside of your comfort zone, right? You should be, as I'm looking at Sue has said this to me before, you want to be uncomfortable. You don't want to be horribly uncomfortable, but you should be uncomfortable to make yourself, push yourself outside of your zones. All right, I'm going to go to a poll question, unless the audience has another question. Okay. So the next question is, can you talk a little bit about insurance and what types of insurance you should be worried about or buying to protect yourself?
Sure. So again, I'm coming from a property and casualty perspective, and I've referenced some information I put together. I just want to stress enough that being properly insured at 23 years old, which is when we typically are buying our first car, you know, having the need to get renter's insurance, and we're only doing that because we're required by the lease. If you don't revisit that, once you're 35 at least, you know, you now are starting family, gaining assets, possibly purchasing a home. And again, then when you're 55, you're leaving yourself totally exposed. In the state of Pennsylvania, for instance, when you're buying your first auto policy at 23 years old, all you're thinking about is, how am I affording this? And, you know, we laugh in our office about one of the carriers that we actually work with, and their motto is, only pay for what you need. Well, in the state of Pennsylvania, if you took that approach, all you need to have a valid insurance coverage is $5,000 of property damage liability, so this is damage you cause to others, and $15,000 for injury or death. So to put it in the simplest of terms, and this is how most 20-somethings are buying their policies, including, you know, my own son thought he'd take the initiative and go online one day. He's like, here's what I can get. I'm like, really? Let me tell you what's all wrong with that. But in the simplest of terms, if you run a red light and you damage somebody else's vehicle, you're at fault, and you bought limits that the state, that's what the state requires, that's it. That's the mandatory limits. You have $5,000 to repair somebody's car. There's not a car on the road these days that's less than 20,000, and the average is 40 and up. And if you cause injury to them, you have $15,000. It's just solely, you know, sorely inadequate. And if you are now at that phase in your life where you have a family, you have a home, you're going to feel some tremendous personal stress. So my recommendation is always to work with an agent that you trust to grow with. You're going to have to trust them because if they do it right, they're going to have to ask you personal questions so they know that they are covering you, your family, and your home. And what other assets you have? We call them your toys, whether it be an RV, motorcycle, all those fun things. And I'm going to throw a couple of specific coverage questions that we find are the most vulnerable ones in our world. So from an automobile, and these are things you can go home tonight and look on your policies to see if you have it. But from an automobile standpoint, do you have full tort coverage? Because at 23 years old, you probably didn't purchase it because you can't afford it. Typically, it's about 20 to 23% higher than what's called limited tort. But what full tort does is give you the ability to sue an at-fault party when they cause injury or damage to you. You get to sue for more than just out-of-pocket expenses. You get to sue for what's called pain and suffering. And it's critically important, especially when you have people dependent upon you. Is your uninsured and underinsured motorist coverage adequate? We typically, as an agency, recommend that whatever limit you carry as your primary liability, which is what you're offering to others to protect them, if you cause harm to them, so typically it's 100,000, 300,000, or 500,000. We recommend that you carry the same uninsured and underinsured, because what that does is protect you if somebody else caused injury to you and they don't have adequate insurance. You can come back to your own policy and recover. Is your home insured to value and on replacement costs? The value of construction has increased significantly in the last 2 years, and if your home valuation is not increasing with it, you could be caught short very quickly in a claim. Should you purchase a personal umbrella liability policy? If you are a business owner, if you have high net worth, if you have teenage or youthful drivers, yes, purchase it. It's relatively inexpensive. Should you consider long-term care insurance, and at what age? Should you have life insurance in addition to what your employer offers? I do. It's relatively inexpensive, and especially if you're young. If you have children being added to your auto policy, ask your insurer if they offer good student and driver training discounts. Encourage your children to establish credit before they need their own insurance policy. In our world, no credit is similar to bad credit, and it impacts their premium from the get-go. I could go on, but I don't want to take up all your time.
I think just to
They're
tag
critical.
on to Susan, you know, I had a personal tragedy in my life when my father passed away, I said, from colon cancer unexpectedly. And my mom was left with a 20-year-old, a 16-year-old, and a mortgage. Similar circumstances to what I went through, but a little bit different. So as part of your financial health, the peace of mind, and if you have children, if you have parents that you take care of, to make sure, I too have short-term disability purchased externally of work. I too have a term life policy purchased externally of work. Chances are someone, and I cannot remember who said this to me, but at my age, which is 45 years young, chances are that I would become disabled before I would need life insurance. So that short-term disability would allow that I would still be able to make with what I would have with work, on top of that, almost my full salary to live my life and pay my bills to care for my mother. So insurance is key in making sure that you're financially secure as well. It's not just having the dollars in your savings, but that peace of mind knowing that your family is protected should something happen to you.
I can't add too much more other than, and some of the folks in the room that work at ESSA will laugh, but I talk a lot about belts and suspenders. So insurance to me is that belts and suspenders, in that you can have this great house and car and money, but if something tragic happens and you're not properly insured, it will take you down. And all your hard work is really, it's gone. So it's so very important. The only one other thing I thought about was key man life insurance from a banking perspective. And when we're lending to businesses that, sole proprietor, or there's key folks within the business that if something happens to them, there's peril in maybe paying the loan back, the continuation of the business. And certainly the family, if there's a loss, they're dealing with a loss. They don't need to be dealing with the bank calling them saying, hey, your loan payment's due. So I think that's an important component when we talk about starting businesses or getting involved in businesses, owning businesses. Just the general topic of finance is talking about key man life insurance. And over the years that I've been in banking, unfortunately, folks that I've lent money to passed away, had key man life insurance. The insurance company pays the bank off. It's one less headache for the family, and the family then basically doesn't have to contend with whatever the business is having a bank note on it because it was paid off by key man. So you covered everything else very well. That was the only other thing I wanted to add.
Thank you. What I really wanted to just point out again is the credit score conversation. So credit score is kind of the key to the financial future. And there's about 23% of adults in the US that don't know their credit score. So if you don't know, find out. So that's your call to action today. As you leave here, find out your credit score and look and model out if you did one thing differently, what would change that score? Because it impacts your ability to get interest, it impacts your ability to get credit cards, and at a good rate, which impacts your budgeting. It impacts your ability to get jobs, to get a mortgage, and potentially to get an apartment. So I would just double click on that and say, today, find out what your credit score is if you don't know it, and take action to improve it. Going to the next
I
question.
have a great example that it just occurred in the last 2 years on how important credit is in property and casualty insurance. So my youngest son got his first apartment, needs to purchase renter's insurance, him and his roommate. So all things are equal, same building, same town, same limits. The only thing differentiating them is their social security number. And my son, we established a credit card when he left high school, where I co-signed, but it was his social, and I let him charge some things on it, and it was paid every month during college. So by the time he's in his first apartment, a typical renter's insurance should cost $150 a year. His was $120, and his roommate was $230, because his roommate didn't have bad credit, they had no credit. They had nothing in their name. And so you're talking, that's 100% increase just on the renters. Imagine what an automobile policy would look like. It starts right there.
Yes.
Can I hear your thoughts on mine subsidence insurance? Because our insurance broker is pushing us to do it. Do the policies get acted on much? Is it worth it?
I can speak personally to it. First of all, they're so inexpensive. They're directly through the state. I don't think they cost more than $250 a year. And my aunt actually lost her home to a mine subsidence. She got paid fully.
Good to know.
Yeah, it's so inexpensive, it's a no-brainer.
Okay, thank
And
you.
you could do it right online. You could,
Oh, really?
yeah, just go to, I think it's DEP. I'm asking my coworkers.
We're having heads done, yes.
Yeah. I would recommend it.
Yes, I mean, if your house or business is not over a mine, would it make sense? Maybe not, but,
I'm in Stanton.
well, I mean, there are some mines in
Big
Scranton.
adult.
There actually is, if you go onto the website, and if you just Google mine subsidence, it'll take you to the site. You could type your address in, it'll tell you if there's active or old mines in the area.
So my aunt was in the Bellevue section.
We're in Greenridge and our house is pretty close.
It's probably $250.
I saw a hand raised over here.
Do you have any advice on refinancing? You know, I have a student loan, I have a car loan. You know, what would you advise as far as refinancing kind of those larger amounts of debt?
Well, yeah, I think that's a great question. The fact that you're thinking about it is step one. So I think meeting with your banker, your financial advisor, someone to really lay out your personal situation, to come prepared with exactly what your income is, what all your obligations are, if it is student loans, car loans, what have you. You know, you do a lot of reading about what debt to pay off first or try to focus on. They always talk about car loans, they talk about student loans. Try to get some of that nailed down or reduce to the lowest possible interest. Because as we know, and credit cards as well, we know they can carry on for a very long period of time. So I think refinancing, student loan, car loan, everyone's specific. They have a specific, what is their income, what assets, what are they qualified for, what is your credit score. There is a lot of programs out there, for sure, that can help and help you refinance student loans, get them maybe a better monthly payment. Cash flow is king, cash is king. Real estate and cash kind of really can set you free. So I always say cash is king. So cash flow is important. What is your cash flow? Can you improve it? And however much you improve it, can you then maybe take that difference and continue to apply it to reduce the debt further? Being debt-free is a good thing.
Any other questions from the audience?
Is there any advantage at this point in time of taking a second mortgage versus taking a home equity loan, knowing that most home equity loans are variable and the interest rate is higher now? Is there any pros or cons that are?
Again, I think it's a similar answer in that knowing your specific situation, the equity you have in your home, what would you be doing with a home equity loan? Yes, we're finally adjusting to the interest rate market now. We were used to 2.9. I saw a meme, and it was this, I don't know, king or something like that, standing very pompous, and he's like, "Yes, I refinanced at 2.91." Right? All the people that are at like 2.91 and 3.25, they're walking around kind of whooping it up, right? We've now adjusted to where the rates are, and There are some great home equity loan rates out there that if you have equity, and depending on what you're doing with the money, are you paying off higher interest rate things, are you consolidating, are you getting more organized, is it part of your overall plan? It's definitely worth delving into.
Just to add on to that too, I think a lot of clients that I've talked to don't know the difference between a home equity line of credit, which could be a variable rate, versus a home equity term loan, which would be a fixed rate. So again, talking to your banker and understanding the need, are you putting a pool in? That's a fixed cost that you want to pay back over 10 years at a fixed rate, and maybe potentially, I mean, depending on what your interest rate is on your mortgage, maybe not consolidating the two, but instead of doing a variable line of credit where there's an open line that you use as needed, short-term kind of loan, almost like a credit card. So I think depending on what your situation is, I think it's very feasible. I'm considering a home equity term loan right now. I have to redo 2 of the bathrooms in my house. They're a little outdated. But even though the interest rates we're in a different environment now, it's still the most affordable way to be able to finance things that you may need versus a credit card.
Yeah, I mean, the reason, we see inventory so low on homes for sale, right? Because people are saying, wow, A, the homes that are for sale, the prices are really up. B, I'm at a 3% or 4%, whatever your interest rate is. I don't really, let me take my 2.91 rate and now have a 6.5% mortgage rate and pay higher for a home. So folks are looking at their home and they're saying, you know what, it's not that bad, let me fix it up. So it's definitely worth looking at either a line or a loan, depending on the timing and what you want to do. It's always really good to have a home equity line of credit. That's like your net. So, if you have equity in a home and you don't have a home equity line, I encourage you to consider it, because in a worst case scenario, all of a sudden, your furnace blows up, or the roof repair, or windows, whatever happens, that's sort of your net. If you don't have the cash on hand, or if the cash on hand is tied up, or it's in the stock market or something like that, that you don't want to, maybe the timing of liquidating it isn't there. That home equity line is your sleep factor. I always apply any decisions financially to the sleep factor. Do I want to buy this stock, which, is like a Mexican pond? Probably not, I won't sleep. So, home equity line is something to have.
Yes, 100%.
Any other questions from the audience? Yes?
So I've heard recently, about RIAs, and, could you describe, more of, what they are and how they could, help you?
So I'm sorry, I'm not
Is it
The IRA?
Oh, IRAs. Okay, I thought you said RIAs, so I'm sorry about that. So an IRA is a vehicle, of course, for you to invest for your future, for your retirement. It could be in the form of, if you work for somebody and you have a 401k, that's a plan that they utilize. However, if you're a small business owner or at a certain specific stage in your life, you may want to have an IRA. So there's benefits to the types of IRAs that you have, from a Roth or a traditional. And typically what I advise clients is to think about where they will be in retirement, in a higher tax bracket or in a lower tax bracket, so that we can talk about which vehicle would be best. There is pre-tax dollars or tax dollars taken out at the time, depending on which vehicle you go through. So definitely something to consider for yourself. And talk when you're sitting down looking at your holistic view of where you're at. But I tell all my younger bankers, they should start, much like I think you said you did with your son, you should have credit cards so that you can start to build. You should be investing something in your future, whether that's a 401k or an IRA, and then you should have a little bit of mad money too, so.
And then I'm going to take a question from the app. My daughter is 1. What do you suggest I do to start setting her up for financial success?
So I don't have any children of my own, but I do. I have 2 beautiful nieces and a nephew who are like my kids. When they were born, I started immediately a custodial savings account for them, just to kind of get the leg up and off the ground. Not knowing whether or not they wanted to go to college or not, there are investment plans that have tax breaks with them, called 529 plans. But I think one of the key things that I'm doing now with my nieces and my nephew is that I'm including them to, or trying to help them build a healthy relationship with money. I'm doing that via, that they have a debit card that's linked to my account in an app, and they get an allowance and they learn how to spend. And as part of that app, they have the option to invest for the future or to donate some from a community standpoint, and then they have their MAD money. So depending on your financial situation, you certainly want to make sure that you are saving for something that may happen to them, or not something that may happen, something they may want to do from a future standpoint, but include them in the participation of that and what that looks like, so they start to develop a healthy relationship with how money works.
All right, well, that is time for today, so thank you all for your questions and your participation. Thank you, ladies, for joining the panel today. So thank you very much.